Here's what keeps financial advisors up at night. $4,650 in IRS penalties hit automatically when you miss one RMD withdrawal, and your custodian won't stop it from happening. Not because they're lazy, not because they forgot, but because the law doesn't require them to, and that distinction costs retirees thousands. Let me walk you through exactly how this trap works, and more importantly, how to never fall into it. The moment you turn 73, or you're already past that age, the IRS has a requirement for you. It's called an RMD, a required minimum distribution. Every single year, you must withdraw a specific percentage of your traditional IRA balance. Miss it by $1, and the penalty clock starts ticking. Here's the critical misunderstanding that hits most people. Most retirees believe their IRA custodian, whether that's Fidelity, Schwab, Vanguard, or your local bank, will automatically send that withdrawal each year. They think it's like a social security check. Set it and forget it. That's belief number one. It's completely wrong. Most retirees also believe they have until April 15 to take their RMD, just like filing taxes. Maybe they think they can take it in January, February, or March of the following year. That's belief number two, also completely wrong. The actual rule is this: the IRS requires your RMD withdrawal by December 31st of the calendar year, not April 15, not January 31, December 31, that's the hard deadline. Now here's where it gets dangerous. Your custodian will send you a notice in late fall telling you what you owe. They'll calculate your required minimum distribution amount and tell you exactly what to withdraw. But and this is the part that blindsides people, they do not automatically initiate that withdrawal. You must initiate it yourself. You have to call, log in, or submit paperwork to actually pull the money out. And if you miss that December 31 deadline by even 1 day, or if you only withdraw $18,000 when you owe $20,000, the penalty is non-negotiable. The IRS charges 25% of the shortfall amount. Let's make this concrete. If your RMD was $20,000 and you withdrew $0, your penalty is $5,000. If you missed by half, say you withdrew $10,000 when you owed $20,000, your penalty is still 25% of that $10,000 shortfall. That's $2,500, and that's just the penalty. On top of that $2,500 penalty, you still owe ordinary income tax on that unpaid $10,000. So in that scenario, you're looking at $2,500 in penalties plus maybe $2,400 in taxes. That's over $4,900 in a single year for one mistake. But wait, there's a third layer most people don't consider. Once you miss 1 year, it compounds. You're now behind. The following year, your RMD calculation is based on your new account balance, but you're still playing catch-up psychologically. Many people who miss year 1 also miss year 2. I've seen clients rack up $15,000 to $30,000 in cumulative penalties over just 3 years of missed RMDs. Here's something else your custodian won't tell you. Even though they calculate and notify you, they're not legally liable if you miss the deadline. The penalty falls entirely on you. So there's zero incentive for them to send reminder after reminder or to force the withdrawal. There's also a critical detail about exceptions. If you're still working and you don't own more than 5% of the company sponsoring your plan, you might qualify for the still working exception. But most people don't know this exists, and their custodian won't proactively mention it. You have to ask, so how do you actually prevent this? First, mark December 15 on your calendar, not December 31. That gives you a 2-week buffer. Second, calculate your own RMD using the IRS life expectancy tables. Don't rely only on the custodian's calculation, verify it yourself. Third, initiate the withdrawal yourself. Don't wait for an automatic process that doesn't exist. Call your custodian, log into your account, or submit the paperwork in writing. Get confirmation that it was processed. Fourth, if you think you qualify for an exception, like still working status or Roth conversions affecting your calculation, document it in writing with your custodian. One missed RMD isn't just a small mistake.